Hey guys, what's going on? It's Rekt Capital. Welcome to today's video. I'm going to talk to you guys about what a bull market retrace looks like. What are some of the things that we have to look at in terms of recurring themes across all different bull markets when it comes to these retraces, and how to make the most of them. What strategies to use as part of your investing strategy towards Bitcoin on the retrace. So let's dive right into today's video. This is essentially Bitcoin now retracing after confirming a new bull market, after breaking out from the multi-year trendline resistance, enjoying that bull run for a few weeks, and now topping out in the form of a cupping, a curling down in price action. This top is the local top for this move, but it's not the end of the bull market, not at least at this point in time, because Bitcoin could still retrace to as far as 8,500 for a retest of this red trendline resistance into a new support before continuing its rally towards the upside. So that's something to bear in mind, and something I spoke about in my latest Forbes feature, because many people are panicking about this bull market being over, but in any bull market, we need to see a natural retrace, because retraces are a natural part of any growth cycle and are a necessity for price to reach higher levels later on. So far so good. Bitcoin is looking healthy on the macro view. It could retrace as far as 8,500 just to preserve that macro bullish momentum. So there is quite a bit of a downside that Bitcoin could still make while remaining bullish on the macro sense. So that's something to really bear in mind, because retraces are essentially opportunities. And this is essentially what Mr. Rothschild made a fortune on. FOMO buying when you see panic and pessimism enter into the market. When people are panic selling, you can see the blood there. FOMO buying when people are panicking, if you do that, you're going to really drastically change your portfolio. So you have to buy when there's blood in the streets, but you often have to go against yourself, which is why the second part of his quote isn't recited as often, because we know this first part of the quote. But even if the blood is your own, you have to go against yourself, your own instincts, because whenever you see a red candle like this on price, you don't want to have anything to do with it. You want to avoid it at all costs. Really important to just understand that you have to go against yourself to be profitable, and on this retrace, you have to go against yourself to secure a low attractive entry, because at the moment, the Fear and Greed Index is suggesting to us that after a 21% retrace, we're still at the 41 region. So there is a bit of fear in terms of the market sentiment towards Bitcoin. But at the same time, extreme fear and maximum pessimism is what precedes financial opportunity and precedes Bitcoin reversals towards the upside, and extreme fear is what happens at around these regions. So there's still a ways to go for the market to actually feel extremely fearful towards Bitcoin. So after a strong retrace like we're seeing right now, 21%, we could see some relief right now. And the reason we're going to see relief is because this sort of downside, this is where sellers exhaust themselves. You can't see strong sell side price action constantly because it's unsustainable for sellers to do so. So we tend to see some buy support, and then we see continuation in the downtrend. So we might be seeing this sort of buy support and this sort of relief rally in the short term before actually continuing towards the downside to continue the retrace. So we have to bear in mind that we might see this market sentiment actually change from fear to a little bit more of a higher level, but then we'll start to see price retrace again, and who knows, we might see an extremely fearful market sentiment, which would be fantastic for Bitcoin's price reversal, because extreme fear precedes financial opportunity and precedes Bitcoin price reversals towards the upside. So let's talk about these retraces in the bull market, because I'm not necessarily convinced that this retrace is over. It hasn't really lasted long. We tend to see retraces in bull markets last a few weeks. This retrace hasn't really lasted for that long. The consolidation, or at least the distribution at the highs for Bitcoin, that is what took quite a while to actually manifest itself in price. So this is the setup that actually precedes the strong downside. So we've only seen a week or two, almost 2 weeks, not even 2 weeks, of downside price action. So I feel like we could still see a bit more, especially since we haven't really tagged the 9,650 level, although we were quite close. We were quite close to tapping that range high of the post-halving range, something I'll speak to you guys about in a bit more detail, but I've also spoken about this in yesterday's video, so check it out if you haven't already. But in any case, about the bull market retraces, Bitcoin tends to retrace 27 to 43% during its corrections. So far, it's been a 21% correction, and you can already visualize that we're not quite even in the range of where Bitcoin tends to retrace. 21% versus the minimum of 27%, that's still a ways to go. I don't know if this is the end of the retrace, because historically it would deviate quite substantially. We've never seen a 21% retrace in a bull market before actually reversing towards the upside for new local highs. So that's something to bear in mind. Historically, 27 to 43% is the range. So just to think about how we should go about accumulating Bitcoin on this retrace, the initial reaction is to avoid buying at the higher end of the range and to buy heavily near the bottom of this range. But the secret to a great overall entry is to simply slowly scale in. So what are the price regions that we should think about in terms of scaling in terms of these retraces? So the last few bull market retraces have ranged between 35 to 41%. These are the most recent retraces because of course 27% happened quite a while ago. So 35 to 41 seems to be a recurring theme in Bitcoin's price action when it comes to its retraces. So a 35% retrace would be 8,100 for Bitcoin. A 41% retrace could be 7,350. So we'd be quite lucky to get these regions. It's quite unlikely that we'll see such a deep retrace, but you never know when it comes to Bitcoin. But we have to bear in mind that Bitcoin tends to end its retraces with long, short-lived FOMO wicks towards the downside. So you see a lot of panic selling towards the downside. So these retraces, these long downward wicks could provide a very important opportunity to secure a low attractive entry in our dollar cost averaging strategy. So these are sort of stink bids. These stink bids could average down your overall average price when trying to average down on the retrace in this bull market. And this is essentially what I mentioned in my tweet. This is a recurring tendency, and it's a tendency that we have to improve or at least implement into our investing strategy when dollar cost averaging into our Bitcoin position on this retrace. So that's how we have to accumulate Bitcoin on the retrace, slowly but surely, slowly scaling in, because dips, this isn't a dip, because a dip happens in a uptrend, and at the moment a retrace takes a little bit more time. That's why we have to also adjust our strategy and take a little bit of time ourselves to accumulate, whereas dips are very short-lived. You have to prioritize time in this case, so quickly accumulate and buy the dip before seeing a bounce. So the main difference here is time. With a dip, you have to rush. With a retrace, you have to slowly scale in. And if you slowly scale in, always bear in mind that you can actually catch a low downward wick to secure a very valuable low attractive entry. And having said that, guys, thank you so much for watching. Please consider dropping a like if you enjoyed the video, and of course subscribe to more videos like this in the future. I'm Rekt Capital, and I'll speak to you in the next one. Speak soon.